This week, Ben and I are talking about some private production estimates, some shifting export pictures, and then looking at some interest rate adjustments maybe coming up in the near future. Hello and welcome. My name is Will Robinson with Brownfield's weekly commodity market update. I'm joined as always with the University of Missouri's Ben Brown. Ben, how's it going?
I'm doing all right. How are you today, Will?
Doing all right. As has been the pattern here as of late, been talking a little bit of baseball, but the Cardinals, meh. It's been a very meh stretch, and your Royals keep kind of fighting up and fighting in there, though.
We're hanging in there. We've had a good week. Come home tonight to face the Red Sox. So big series, big week series here.
There you go. So talking about some big series in baseball, it's been a little bit more lackluster on the grain side, a lot of sideways movement and kind of some up and down trade. But to give a quick rundown on the week's adjustments, this is as of the close on Monday. For September, the corn contract for September 2024 down 6 cents at 3.90. December 24 corn down 5 cents at 4.07. September soybeans up a cent at 10.31 on the week. November soybeans for 2024 up a cent at 10.40. Soybean oil on a cents per pound basis for September down 1.49 cents at 41.09 cents. Soybean meal on the short ton basis for September up $3.70 at $338.70. The September wheat contract is up 8 cents at 5.39. That July 2025 wheat contract up 9 cents at 6.01. October cotton is down 0.96 cents at 66.55 cents. December cotton down nearly a cent and a half at 67.78. Then that West Texas Intermediate crude oil dropped $1.59 a barrel at 73.17. So Ben, not too drastic of adjustments. Coming into the close this week, what's the market really signaling to you? What's it really waiting on?
Well, outside of cotton there, this is probably the quietest week we've had in, gosh, I don't know, maybe what seems like months at this point. I think we've kind of gotten used to some pretty drastic changes in some of the different markets. And again, outside of cotton, everything kind of seemed to hang in there. If I could pick on one thing, that West Texas Intermediate crude oil price continues to work its way lower. It wasn't that long ago, just a couple of short weeks ago, we were looking at prices above $80 a barrel. Now we're getting closer down to $70 a barrel. I think that just continues to signal some of the softness in the global economy and certainly in the energy markets.
Well, Ben, on the other side of that balance sheet, looking at production expectations for this year, StoneX is a private firm. They put out their estimates for some production numbers on the year, maybe, and they came in a little bit stronger in certain areas than USDA, expecting a pretty strong corn crop, for instance. So how will the market really digest these types of reports, and what are your expectations on, the numbers in the report? How in line might that be?
Yeah, so we'll start here with StoneX. It should be noted that there's several private estimates that will start to trickle out here in the weeks ahead and kind of become routine as we work our way through the fall, as they do every year. A couple of commentary notes, I guess, just real quick. It's never really quite understood how the market will react to these private estimates. A couple of reasons for that. One, there's not as deep of a history to kind of work for them and analyze. And so, we tend to see markets react very strongly to USDA numbers because there's a long history of data to kind of pull from. The second thing is it's easy to get USDA data. You don't have to have a subscription. You can go online and you can pull as many years. In fact, I think on the yield side, there's like 100 plus years of corn and soybean yield history available. And so the market has a lot of what's access is, I guess, the word I'm going to say to correlating historical USDA data. And so that's why we always see such strong reactions to USDA data. It's kind of considered the gold standard because it's easily acceptable or accessible. It's easily to access, and we've got lots of years to compare against. These private companies, not so much, right? Like, it's sometimes hard to get the data. You have to have a subscription. You can't get the history. There's not as deep of history. So that's I did like a full minute and a half soapbox there of saying why sometimes these surveys come out or these private estimates come out
And they
people
don't
expect the market. Yeah, and the market, people expect the market to go one way or the other, and it doesn't. And I think I'm not picking on StoneX. StoneX did a great job last year. If you look at StoneX's August estimates for corn and soybeans, they were almost spot on to where USDA finished the year at. Now, granted, there was quite a bit of variation throughout the fall in terms of those changes in yields, but their first estimate was the closest to the final one of all their estimates. So I look at this. Okay, so I've now teed this up. So StoneX said the national average yield is 182.3 bushels to the acre. That's higher than where USDA currently is in their July estimate. That's nearly 5 bushels per acre higher than our current record for a national average yield. So again, the expectation is very large crops. However, the market seemed kind of disappointed in that number. And I think that's because the market was expecting a number closer to 183 and a half. And so, a little bit of tampered expectations. Of course, USDA will get the chance to update their yields this coming week, or I guess next Monday. On the bean side, StoneX estimated that the national average soybean yield was 52.6 bushels to the acre. A very similar, story here. That number is quite a bit higher than the July USDA report. But I think, again, the market was maybe a little bit sad or disappointed because they were expecting a number close to 53 or 53 and a half bushels to the acre. So again, this is a data point. It's going to be something that people are going to talk about and pick apart. We've got quite a few, days left in this growing season to where things can happen, and we can see, these estimates change. But I think the bottom line in here is a very large crop across the country. And, these StoneX numbers maybe weren't as large as what some people had feared.
Well, and looking at the numbers, you'd almost expect that would probably be the case, because you think about how the growing season usually operates. There's a larger swing to the negative than the positive on adverse weather effects. You think of maybe the crop's potential starting out at a metaphorical 100%. Every time you get an adverse weather effect or impact, you're going to drop down the crop's potential, whether that's drought stress or derecho events. So it kind of makes sense, though, maybe to have that built in, a little bit of a cushion built in there moving forward. But looking at the overall crop conditions, we're continuing to see pretty strong crop conditions. So it will be interesting to see where those crops kind of turn out at the end of the growing season as we turn into the fall. But one thing that we can track now with a little bit more certainty are the exports. And we've hit some strong numbers for corn export inspections for the time of year. Ben, what's this really signaling to you on maybe the opportunity within that?
Sure. So we've seen some very strong corn export inspections here as of late. On the most recent week, nearly 48 million bushels of corn exported out of the United States. That's a very strong value or volume for this time of the year. It's not value because it's not price, it's just quantity. So volume, there we go. Very strong volume for this type of the year. As a result, we've shrunk the deficit that we've had in the export seasonal pace picture. We're still behind, but we're quickly catching up. And certainly the last couple of weeks have been supportive, I think, to the corn market, that not only do we have strong sales, and the sales certainly suggested that we could have a very large corn export year, but now the inspections are picking up to basically, support or to confirm that the old crop export year is going to be very strong, at least on the feed grain side. So, I sit here and I'm happy, but this has become, a kind of a very quickly exciting turn of events to where, hey, maybe this actually turns into some better sales for the new crop. And it's coming from our traditional markets. This last week, Japan represented 43% of that large volume of exports. Mexico was 22%. Colombia and Spain both 10%. So it's coming from a range of countries, and certainly we hope that continues in the next couple of weeks.
Yeah. And, just looking at it historically, China is generally the number one buyer, but, it is kind of I guess, some solid footing to have a diverse set of markets to export into. It gives you a little bit more opportunity and options looking there. But Ben, looking at...
Will, can I interrupt? So yeah. Soybeans, China is the largest market for soybeans. On the corn side, it's Mexico. Mexico's our largest. Yeah, Mexico's our largest corn market, followed by Japan and Colombia, South Korea. Those are kind of our corn export markets. We've only had 1 year, really, where China has been, really 1 or 2 years, where China has been a major buyer of international corn and U.S. corn. and that was back in 2019 and 2020. We haven't seen them. We've heard a lot of chatter about them entering the market, but they still kind of remain absent out there. So it's kind of the golden goose, if you will. Everybody always says, oh, if China enters the market, that could really change our corn export pictures. My bottom line here is we're doing that with other markets right now: Japan, Mexico, Korea, Spain. Those are solid markets for us.
Well, and looking at just that situation, what do you think it would take maybe for that golden goose to kind of come toward the U.S.'s direction whenever a lot of that seems to be centered more around South America?
Well, so we could see some opportunities here in the next year. I sit here and I say I think exports is kind of that picture as I'm looking out in the the 2025 marketing year. Exports is the part of the demand complex, the three-legged stool that we like to talk about, that I think could materialize for the corn balance sheet. A couple of reasons for that. One, I think we're competitive in the global market, at least when it comes to accessing and the quality of product that we have. But then I look at South America, and certainly in Argentina, they've had a really rough go this year with grasshoppers and disease, and their producers are signaling that they have they have the expectation of moving away from corn to soybeans next year to help break that disease pressure. In Brazil, we're seeing very weak corn margins for producers, and they've indicated that they plan to move to soybeans or shrink that second crop, corn crop as well. And so I think that the export picture could be very strong for U.S. producers, maybe even into China in the year ahead. We just need to see it materialize. And I think as we get into harvest, some of those pricing opportunities will happen. And I hope that we see buyers come in and buy in our market.
All right. Well, Ben, as we wind down here, one last point we want to kind of hit on a more of a general economic factor. The Federal Reserve has been signaling that it's still looking at a potential interest rate cut in September. How much of a shakeup do you think that might add into the market? And what is the main meaning to ag producers if that does come through?
Yeah, well, perception means a lot to the market here in general. And for the longest time, we had the perception that bad news was good news in the U.S. economy, meaning that if economic data came in bad, that actually was positive fuel to the stock market because it meant that interest rates were coming. All of a sudden, that perception really switched very quickly to where we got some rather disappointing economic data, the jobs report for July being one of those, unemployment being another category. And that perception switched very quickly. All of a sudden, bad news was bad news. And we've seen the market, the stock market just kind of crater here the last 5 days. It's spilled over into the livestock complex, which then kind of impacts our feed grain markets. The decline in the equities markets also tend to have an impact in the fuel market, which we talked about this September West Texas Intermediate crude oil at the beginning of the show. That has an impact, and that the expectation around driving and fuel use has an impact on ethanol demand. So all these are kind of intertwined. I would just simply say that for as quickly as the fears of a global recession and the need to cut interest rates before September came about the last couple of days, I think today we've seen a little bit more stability. The service sector index came in strong and actually showed that the economy continues to grow in the service sector. And I think that kind of helped alleviate some fears. But certainly the expectation by the market is an interest rate cut in September, and maybe even as much as 50% of 50 basis points of an interest rate cut in September. So we'll see.
50% would be a heck of a cut.
Yeah, so 50 basis points. Sorry, yeah, so 0.5%, a 0.5% cut in September could be on the table. We'll see what the next month and a half have to provide before we get there. So I guess my bottom line here is today or this weekend there was lots of calls that the Federal Reserve might have to do a kind of a unplanned meeting to cut interest rates. I don't think that's going to happen. Nothing, to me at least, is showing that the economy is deteriorating so quickly that the Fed needs to have an unplanned meeting
right now
between now and the end of September.
Well, looking at things that farmers and ranchers can look at right now, what should they really be paying attention to for the next week or so?
Well, so after last week, it's a very quiet economic week. I feel like we had just the works, the whole kitchen sink thrown at us from an economic data standpoint. So a little bit quieter week this week. Everything is teeing up for the WASDE and August crop production report dump on Monday of next week, Monday the 12th. As a reminder, a couple years ago, USDA did away with their objective field surveys for corn and soybean yields in in August, actually corn yields in August. So the August yield estimate will be survey based. This is kind of the first, if you will, state level look at corn yields by the U.S. government. September is when those objective surveys start. So just a reminder about that as we look ahead.
All right, Ben, it's always a pleasure to have your knowledge and information here on the program. Viewers and listeners, if you'd like to learn more about us, what we do, our sister program, the Weekly Livestock Market Update, you can do so at brownfieldagnews.com. Ben, thanks again. I'm Will Robinson on Brownfield.